So a quick recap of today's trade. That being said, the trade I did not take, but was a A+ setup. So this goes into books to make notes. It actually took place at 1 p.m. US time, which for me is a very unfortunate time. It's 7 p.m. So with dinner and the kids, bringing them to bed is very, timing-wise, very unlucky. And many setups actually do occur between 12 and 2 p.m. US time. So quick, this is the hourly. There was a remainder of a 4-hour fair value gap. Price broke through, found support, ran away, came back, found support again, and there was this small H1 fair value gap which provided support during this entire period of, I think it was 6 hours. Similar happened for ES. 1 hour fair value gap gave wonderful support, and I will go into the trade 15 minutes just to show you what happened. Here was a 15-minute fair value gap. Price found support, made a really weak bounce, created relative equal highs. Same for ES, and then I think we got quite the divergence between what was happening for NQ and ES. So the moment price broke down from this M15 fair value gap, we would be, let's say, sure to hit this 1 hour fair value gap. Then the whole charade of price jumping up and down for NQ happened. There was the 8:30 data week, uneventful data from the unemployment claims according to expectation, and price was just chopping around. But what happened is that NQ made consequent higher lows, higher highs, while NQ was just chopping away. For me, this is price action with absolutely no added value. I do not feel comfortable, and I could force a setup, but I did not, because I don't know actually what I would do with this trade. So I wait for something that is more clear and actually screams at me in the chart. So what happened? These equal highs actually created a major SMT, and once price ran away, it also did for NQ. But as you can see, there was like strong volatility. Price hit and ran the equal highs. So that meant that the objective was taken. So that was that. But then there was a correction. NQ actually hit the top of this range again to rally onwards. This could have been, let's say, an inverse fair value gap trade. Could be on the 5 minutes, on the 1 minute, but according to my system, there was no sweep. And there was also no SMT. So even though we would hit this fair value gap on the 5 minute, normally I would only look at 15 minutes fair value gap combined with either or a sweep, either or a SMT. This did not give it to me. I was also not at my desk, so I didn't know. There was another level up here, which didn't run, it didn't get tagged, but here actually we had a major SMT. As you can see, price ran these highs for ES, but NQ is lagging bigly. And what did I see here? So I had, I think, this level marked as my change in the state of delivery. Now I'll switch to so the moment price ran this level, you could have taken an aggressive entry, of course, maybe in this fair value gap or otherwise this fair value gap. Price ran, did not close below this body, ran up and then closed below. And then it could be interesting to see for any pullback into a fair value gap to open a short. Let's see, because this would have been an interesting opportunity to open a short. Also, because we had, that's just for confluence, another SMT here, but on the lower time frame. Here, that actually is a beautiful SMT. So this was a perfect setup. So I think seeing this SMT in the major SMT, this would have been a opportunity to aggressively short towards this level at first. I personally prefer not to go to the 30 seconds. This would not have provided a proper setup, because then you would wait for the close and then price already drew down quite a lot. And this, in my opinion, is too aggressive. Would have given a proper entry, but not my style. So this is the safe short, to wait for the close, change in the state of delivery, and then either go short. What's the opportunity? Go short on the state of delivery, and then target these lows here. That would give a beautiful 2.4, or wait for entry into this fair value gap, stop at the high, or if you want to do really aggressive, but I wouldn't recommend here, and then trade at least until here, maybe for a partial, but then also target this one. This gives a far better RR than the first trade. So possibility is to scale in on the change in the state of delivery with maybe 30 to 50% of contracts, and then add whenever price gets into this fair value gap. Added confluence was also that ES already broke down already on this low. So you can see that price was already here. It retested, and then it actually made equal lows based on the bodies and another lower high. So it was already front running whatever NQ was likely to do. And then traded back into this big H4 level, which was created in here. It also had an H1, but I generally take the highest time frame fair value gap. If I want to be more specific, I'll take the lower ones. So any type of fair value gap within the bigger fair value gap, which is more recent, I would take. So for example, this 1 minute for me holds relevance because it's taking place within this 4 hour fair value gap, especially when you have balanced price ranges, so that you have like this inverse fair value gap plus this level, like this. And then I would mark out the part where it overlaps, which would be a bit smaller here. But okay, so this would have been the ideal setup. So this goes into the book.